This is a deep dive into BFLY Network, as well as a look at their Q3 results, which they posted last Friday. Now, this company has a really interesting product with their handheld ultrasound devices, but the real magic might be in their in-house developed ultrasound-on-chip technology. So is this an ultrasound company or a chip company? Let's dig in and find out. So the origin story of this company is pretty interesting. Rothberg, the founder of BFLY, had already had some success by putting DNA sequencing on a chip when around 2010 his daughter was struggling with kidney issues. And so he was looking for a way to advance body imaging, which I assume back then was also only done on ultrasounds, big machines in hospitals, and he was trying to think of better ways to do that. And so he ran into this MIT professor, Max Tegmark, who was working on connecting images from thousands of radio telescopes to measure energy from distant stars. And to pull this off, he had to create something called a BFLY network. And that gave Rothberg the idea to put ultrasound on a chip. So he had already put DNA sequencing on a chip, and now he would do the same for ultrasound. So he went to this professor and said, look, I want to use this idea, I want to start a company around it, but you need to give me your best student. And that's where Sanchez came into play. He was the first employee of the company and is still leading the science effort at BFLY today. So they went on to develop their product. They raised about 250 million in 2018, valuing the company at 1.3 billion. And they went live on the New York Stock Exchange in 2021 via SPAC, where they raised about 600 million. So here are the people involved in the company today. You have Jonathan Rothberg, so the founder that we just discussed, still on the board. Here he's receiving a medal for science and technology from Obama. He's a bit of a serial entrepreneur and inventor, worth about $500 million through all these different ventures. So good to see that he's still involved. Then here's Nevada Sanchez, so that's that best student that the MIT professor gave to Jonathan to start the company. After his MIT education, or during, he did a bunch of different internships, but today he's still the Chief Innovation Officer. So great to see these two founders basically still heavily involved in the company. They have a bit of a professional CEO that they hired, has had a lot of experience in healthcare. The last company he worked at was Caption Health, an AI-guided ultrasound platform, so maybe a bit of overlap there with BFLY. And finally, Larry Robbins, who is also a board member, a venture capitalist worth about 2 billion, who was involved in that SPAC that got the company public initially. So let's have a look at the shareholders. They have two types of shares, Class A and Class B. Class B has 20 times the voting rights of Class A. So going down the list, you have the CEO, who holds about 1% of the stocks. You have Larry Robbins, that venture capitalist, who is on the board. He holds about 8%. And then you have Jonathan Rothberg, the founder. He holds 15% of the shares, but he has voting rights of 72% because he holds all of the Class B shares. So really a strong grip on the company. Then looking among the institutional investors, you have ARK Investment Management. You might know ARK from Cathie Wood. She's a really famous investor and founder of ARK Invest. So investing in really disruptive technology, companies like Tesla, things like Bitcoin, and they've been an investor in BFLY since 2021. And so BFLY is part of one of their ETFs that you can buy depending a bit on the region where you live. That comprises of many different companies, and so they're part of the ARK Genomic Revolution ETF. And so there you have all companies that are expected to substantially benefit from extending and enhancing the quality of life by incorporating technological and scientific developments and advancements in genomics into their business model. For me, it gives confidence that such a high-profile investor is interested in this company and also invested for such a long time. And now people have different opinions about Cathie Wood. A lot of people call her crazy. Of course, she invests in a lot of disruptive technologies that sometimes bear fruit only very far into the future, years into the future. So it's possible that you look foolish for a couple of years until that company really takes off, and then everybody envies you. So I'm quite positive about her, and for me it's a good sign that they are invested in this company. So let's look at one of their promotional videos to get a better idea of the product.
The new BFLY iQ3. It's the answer in point-of-care ultrasound. With the sharpest image for easier, clear answers. Ready? At your fingertips. We've raised the bar by delivering best-in-class image quality with double the processing power and optimized clarity for definitive and rapid diagnosis. We advanced imaging capabilities beyond expectation and added new automated tools for you to get instant and consistent answers on the first visit. Because every second counts, we accelerated charging and extended scan times, so our device is ready when your patients need you most. With you in mind, we refined the ergonomics and designed a smaller, more functional shape, putting you in control of every exam where precision is key.
And so besides this general purpose IQ3 ultrasound, they have two specific applications, one for bladder and one for veterinarians. So to get a bit better understanding of Butterfly's positioning, I compared it to traditional ultrasound here. And in the words of John Martin, their chief medical officer, Butterfly IQ3 isn't replacing traditional ultrasound, it's expanding it to every clinician, every patient, everywhere. And so there are clear differences between the two. Butterfly is a handheld pocket size, 120 grams, while these large cards, traditional ultrasounds, can be up to 300 pounds. Price point is under $3,000, whilst traditional can be up to $250,000. The image quality is good to excellent on Butterfly, but it might be even better in traditional ultrasound. Now they're working on next level chips in Butterfly that maybe even make Butterfly exceed this quality, but let's see where they get. And then in terms of maintenance, so there's basically no maintenance for Butterfly, and there are annual service contracts for these big machines. So maybe with advancements in their technology, they can get to par or even better than traditional ultrasounds. But I think more interestingly is that there's a really big market where today these traditional ultrasounds are just too big and not possible to use and too expensive, where Butterfly can really enter the market. Think about vets, people on the road, home care, all these types of situations. So like I said, they're continuing to progress on their chips. From what I understand, they're using two in all their devices. So you first have the ultrasound on chip that's generating the images, and then you have the AI processing chips that's taking those images and manipulating them. So in the second half of next year, they're planning to roll out their next generation ultrasound on chip, the P5.1, with expected much higher quality images. And they're also working on their next generation Apollo AI chip that is supposed to be a step up again from their current chip. And so what I find super interesting is that they take this as really the core of their business and continue to invest in it and improve. And going forward, these chips might play a really important role in the business model of the company. So these handheld devices then click into Compass, Butterfly's operating system that's basically run on iPads or iPhones. And they seem to have all the different tools needed, so the governance seems quite steady. Data storage all in the cloud for all the images that are generated through the scans. Security seems on point. The Compass is interoperable with the existing systems of these hospitals and other types of organizations, which is good because then you don't need to set up a whole different flow. And apparently their billing flow is quite good to where people using Butterfly Compass bill a higher percentage of their scans. And so of course this is important for the payback of this investment in the Butterfly scanners, because the more scans you can charge to your patients, the sooner you have the payback for your investment. So that's a plus, I would say. And also the platform offers a lot of training to make sure that the users get the most out of the tool. And then they have something quite exciting called Butterfly Garden, an AI marketplace. This is basically an app store that clicks into their operating system Compass. So you can imagine making a scan with the handheld device that's uploaded into Compass, and then you can use third-party or Butterfly apps that click into Compass to analyze this different data depending on what you're using it for. And so in their Q3 earnings call of last night, they highlighted an echocardiogram focused app called Heart Focus that became the first FDA-cleared Butterfly partner app. And to me this is pretty exciting and a cool model, and it reminds me a bit of Samsara, who basically has the same. So they collect data, they have it in their own operating system, and then you can analyze it using third-party apps. So in the future, I think this whole data asset that Butterfly is generating with this can be quite interesting too. So now we get to one of the growth pillars for BFLY, called BFLY Home Care. So here, imagine that somebody has been discharged from the hospital and they're recovering in like some type of nursing home. If you can take good care of them there and, for example, perform certain scans that usually are only done in the hospital, you can maybe prevent them from having to go back to the hospital and save a lot of money. And so these different home care providers are in talks with BFLY to see if they can adopt their technology. And these are supposed to be pretty big contracts. Their guidance that they give, BFLY, is saying, okay, we expect to get 95 million in revenue this year, but that's excluding what could come from home care and from Octave, which we'll talk about next. And apparently these contracts can be quite significant, in the tens of millions of dollars. So once these come through, that will give a pretty big bump to the stock price, I imagine. But currently they're in talks with these different parties, and their claim from yesterday evening's Q3 results call was that the moment we have significant updates, we'll let you know. But apparently it's ongoing and it's just a matter of time. So that's a really interesting part to keep an eye on. So then we get to their second growth pillar called Octave, which can be super interesting. So this is basically saying, okay, we have this ultrasound on chip that we use for our ultrasound devices, but maybe we can sell those chips to other companies that can use it for different types of applications. And so they're currently in discussions with a lot of different partners. They cannot announce yet what's going on, so a bit similar to the home care stuff. So hopefully that will come through. And a really striking comment from the CEO about this last night in their earnings call. By the way, POCUS means point of care ultrasound, so the ultrasound that you use when you're giving care to a patient. So what he stated was, if these opportunities play out the way we see them shaping up, BFLY may over time transition from a POCUS company with an ultrasound chip to an ultrasound chip company with a POCUS business. So really a transition from being an ultrasound supplier to being a chip supplier, which of course could be super interesting. So let's keep an eye on that and see how it pans out. And so the company is not only about making money, they have some charitable activities going on, notably with the Gates Foundation from Bill Gates. And I'll just let Jonathan Rosberg, the founder, explain it to you in the video.
But a few years ago, I got a call from Bill Gates' people, and he wanted to talk. So I flew out and I had a private lunch with Bill. And he said, you know, we could really change how children are cared for around the world with your ultrasound on a chip. Because now you have a portable ultrasound, it has artificial intelligence, so it's smart. And with the Gates Foundation, we've deployed thousands of these globally. And every day, they're not only saving somebody I love, they're saving somebody else loves.
So a pretty nice bonus next to their commercial potential. So looking a couple of years into the future, this is a picture from their 2024 shareholder meeting, where they laid out a bit their plan for the coming 5 years. So they expected cash flow break even by 2027 and a revenue of about 500 million by 2030. Today they have a revenue of about 92 million annualized. So some things have happened since then, but in last night's earnings call they mentioned we laid out our 5-year plan in March 2024, which is referring to this. And to me, if you don't want people to remember something, you don't bring it up, which means that I think that it still holds some validity. So a closer look at their financials with comments from their Q3 earnings call from last night. Q2 was a bit rough. Their customers were experiencing some headwinds, meaning that their revenue didn't come through as planned, and they reduced their guidance for the rest of the year. You see that the stock took quite a big dive here on that news. It's now basically back, and it took quite a big ride yesterday. And so what they say is they're seeing the clouds lifting, basically the demand coming back, and they reaffirmed their full year guidance towards 91 to 95 million. So that would mean 25 to 29 million in revenue, which would be a record for them. So I guided, basically I took the midpoint of this guidance to come to 27 million for the quarter. So these are in blue, the revenues per quarter since Q1 2023. In terms of OPEX, they had a write-off of 17.4 million for old generation chips that they thought they were going to use in their IQ Plus devices, but actually people stepped up to the next generation, so they didn't have any use for those chips anymore, and they took a big write-off. I excluded that from the view here to not make it too complex. They had a similar write-off in Q4 of 2023. And so what you see is that their gross margin is pretty steady and increasing. So that's basically the revenue minus the cost of goods sold at 64%. I expect more or less the same for Q4, along with the 27 million in revenue. And they're guiding for an EBITDA loss of around 9 to 12 million. So if that's the case, they should show quite a nice improvement in their operating margin, getting closer to that break-even point. In terms of cash, they use about $32 million in cash per 12 months, and they have a cash position of about 150 million, which means that they can fund their operation basically for the coming 3 or 4 years. So that's very positive, and let's hope that they're break even before they run out of cash, so that they don't have to raise more and they don't dilute the current shareholders. So let's have a look at valuation. The stock is currently trading at $2.70 with a market capitalization of a bit under 700 million. They had a really big rally yesterday, probably on the positive outlook that the company gave. So how should we think in terms of stock price for this company and what it should be worth? You can see that from the hype about 5 years ago to today, they're down quite a bit. And so one way to think about it is their current price to sales ratio. We cannot look at their earnings because they don't make a profit. How many times does their revenue fit into their market cap? So they have a market cap of almost 700 million, and they have revenue of probably 95 million this year. So that's a price to sales ratio of about 7. So today they're not break even. They have a relatively low revenue growth and quite some headwinds in securing these different contracts. Even though they say they're working on it, they haven't materialized yet. So a relatively low price to sales ratio. So what happens if all their plans work out, as they say? So if they scale their revenue until 2030 to 500 million, that would mean that they 5x basically their revenue from their current 95 million. So a 5x in revenue, if they keep the same price to sales ratio, would mean that the stock could go up by 5 times. So if they do all these things, the Octave sales goes through, the home care products, they expand their product range, maybe they just start selling their chips under Octave, and maybe with even improved margin. It could be that their price to sales ratio increases from the relatively modest 7 to maybe more 10 or 15, which would mean that the ratio, the price to sales ratio goes times 1.5 versus the 7, so 10 versus 7, or 15 versus 7, which means that those two combined, so revenue growing 5 times and their price to sales ratio increasing by 1.5 or 2 times, that if everything goes according to plan, if they roll out their roadmap, it could be that there's an upside of around 8 to 10 times for this stock. Of course, if they do less, it's going to be less. If they do more, it's going to go higher. And maybe if people go crazy about this stock, it can also go higher. So that's how I think about it. I think this is it can be a good opportunity, but only if they execute on their plans. I'm positioned in this stock, not as much as I would like, so I'll be looking for opportunities to add to my position. And so in terms of risks, I think one super clear risk that you can subdivide into 5 million different components, but basically, will they be able to execute their roadmap? If they do, this stock has a lot of room left to grow. If they don't, they might hang around here at this price level or go down or go nowhere. So for me, that's the key risk, if they don't manage to capitalize on their strategy. So that brings us to the end of this video. I hope you enjoyed it. If you did, please like, subscribe, leave a comment, tell a friend, so that we can grow this channel together. As always, I try to do my best to give you the best information that I can, but always supplement it with your own research before making an investment call. Thank you so much and see you next time.